Aussie dollar reaction. Coming into this decision, there was a real divergence in views, but the currency didn't react too much to it. Were you surprised?
We did see quite a big movement from the currency, but it was after the RBA cut. So we saw, I guess, the low of the session sort of around about 4 o'clock, where we did see the Aussie dipping below 103. The key here now for the Aussie dollar is whether we are going to see the start of a downward movement in the Aussie dollar, or whether it's just more of a temporary move. And that's really because we have seen interest rate cuts before. In the past year, we've seen an interest rate cut in November, December last year, and also almost halfway through this year, where we saw 75 basis points worth of cuts. And if we have a look at the impact on the Aussie dollar, and if I can bring up the Aussie dollar chart, this is over the last year, this is what it looks like. You can see that the impact that the Aussie dollar, the interest rate cuts that we had in November and December had on the Aussie dollar, and you can see it was a temporary move before the Aussie dollar once again moved higher. And of course those ones sort of midway around the year, once again temporary move, while the Aussie dollar strengthened off again. So no doubt in the short to medium term we will see the Aussie dollar give back a bit of ground on the back of this interest rate cut, and also expectations on more interest rate cuts to come. But I guess the key here is whether we are going to see more of a prolonged downward move in terms of the Aussie dollar. Now, this is especially important for those companies making earnings offshore, and we did see quite a big uplift for those companies which are reliant on the Aussie dollar. News Corp was up by 1%. We saw Brambles up by 1%. Amcor gained 1.8%. We know that ResMed is impacted strongly in terms of its gross margins. About 70% of its production costs are impacted by the Aussie dollar, and that stock was up by 1.3%. We know Orica, for every 1 cent move that we see in the Aussie dollar against the US currency, it has about a $3 million impact in terms of profitability. That stock up by 1.5%, and the miners also affected because they usually sell their product in US dollar terms. So stocks like Woodside Petroleum doing well today, up by 1.1%. So the Aussie dollar is a very big input in terms of the Australian companies, and also in terms of their earnings.
Julia, Tim Harcourt here. We saw with the DHL export barometer that since the exchange rate's been strong, 2/3 of all exporters now import. Do you think that's really relative interest rates that drives the Aussie, or do you think the fundamentals of the economy still matter?
I think it's a variety of both, and I think the problem with the high Aussie dollar at this point in time is not so much that we're seeing a high Aussie dollar, but we're also seeing a weaker US currency. And for a lot of the market, especially that mining space, it's a double whammy. Not only are we seeing weaker commodities, but we're not seeing that weaker Aussie dollar to help offset that. I think part of it has been foreign inflows into Australia, including some of that demand for safe haven assets like government bonds. But the fact that we are seeing the Aussie dollar relatively elevated compared to commodity prices, I think really does hit home for a lot of those companies on the Australian share market, considering that we have such a large weighting towards those miners.
Now, we've managed to break at least one technical level.
I think David took the words right out of my mouth. We have beaten that 4,400 point mark quite convincingly, so looking towards that 5,000 point mark as a target. Today we saw the market reaching a 6-month high. If we have a look at a 1-year chart of the Australian share market, this is what it looks like, and you can see where we are. We're just testing that 1-year high for the Aussie share market. So if we see another good couple of sessions, we will be at a 52-week high for the Aussie share market, and it does look good in terms of momentum. One of the concerning things though, and a bit of a warning sign, is that it is on extremely light volumes. We saw only $3.2 billion worth of stock traded today, but it is good that the Australian share market has had a very positive reaction to that interest rate cut, and if we can continue that, that will continue to be a positive for the Australian market. And I guess the real turning point for the market comes when we do start to see positive earnings growth. In FY12, we saw earnings growth -2% for the Australian share market. Hopefully all the rate cuts that we have seen in the last year start to make it easier for Australian companies to grow and cheaper for them to grow. We've now seen 1.5% worth of rate cuts since November, and there are some small signs that these are starting to flow through, with Australian house prices in September seeing quite a substantial jump. So it will be good news for companies if we start to see that earnings momentum and earnings growth, as well as the price momentum that we've seen in the Aussie share market over the last few months.
Okay, Julie.